Good morning. Welcome to Compound Interesting. This is Brendan Kelly, financial advisor with Fort Myers Wealth Management Group. As a reminder, I am an independent advisor through LPL Financial. I left the big banks to start my own firm, wherein I could have an obsessive focus on improving client outcomes through the use of active risk management, client education enrichment, and understanding on a very deep level client expectations. Today, as always, we hope to empower you with information and questions that you can ask your current advisor to help either deepen your relationship or allow you to make a decision to move on. One of the first and most impactful questions that I think you can ask anyone, any advisor, especially the larger the firm that they work for or with, this is something that may shock you. How many clients do you work with? And I will be asking a handful of questions. You need to ask these questions. I will be answering them and giving you some of my anecdotal experience with all of these areas. So how many clients do you work with? Well, when I was at the really big firm before I left, I worked with 550 people. Households, that is. Multiple people can be in a household. So humans was probably closer to 1,000. If you think that anyone can properly manage a business by themselves in the financial services industry, wherein they have to interact with 1,000 people, I haven't met the person who can do that properly. The corporate structure of the very large firms does not allow them to work with the proper amount of people because it is all about driving gains for the corporation in order to please stockholders. So if it doesn't improve the bottom line of the very large corporation, then it's not a decision that can be made by your advisor. Said another way, if it's not good for the firm, it doesn't matter if it's good for the advisor or the client. So 550 people is way too much. You may have someone say 100. You may have your advisor say 800, 400, 300. Regardless of what the answer is, you should know what that number is so you can know where you are in line the next time you have questions or concerns. Say we have some relatively garden variety market pullback of 10, 12, 15%. You have some questions and comments and concerns that you would like to address with your advisor, but you're number 412 today. So take a number. Hope maybe they get back to you by the end of the day, but understand a lot of the things that may get in the way of prompt contact. Something else you can ask, and I am almost certain, again, the larger the firm, the less cohesive this answer will be from your advisor. How many clients do you plan to work with? Because again, if you are tied to a very large corporation that has public stockholders, all that corporation really cares about is driving gains in order to please their stockholders. So you ask somebody at a very large firm, how many clients do you plan to work with? They're going to probably be able to come up with an answer right off the top of their head, although I'm certain they've never thought about it. Because there is no end game when you are at the very large firm. There is no, well, I plan to get to 100 clients with an average of $1 million, so I can manage $100 million and truly service 100 clients with a team around me to help. That is foreign to an advisor working at a very large firm, because the expectation is that you must grow your business. How you do that at the very large firm does not matter. You must grow the bottom line because we are a publicly held corporation, and we must increase profits for our stockholders. So the next time that you start to think about your relationship with your advisor and the firm, and you start to think about how could someone possibly work with 500 or 600 humans, or 800 humans, or 11 or 1,200 humans, here's something that should come to mind. How customized are my investments? How much does my advisor really understand about my pain points when it comes to markets? Because we have been and continue to be in the very longest bull market of all time. This has disguised a lot of potential holes in your plan, absolutely. In your relationship with your advisor, yep. And in your understanding of what your advisor does for you. Because if you just check your statement every month, and then every quarter, and then every year, year and a half, 2 years, and generally speaking, things are pretty good enough, you don't have any questions, comments, or concerns. Things are going up. My things are going up. Not necessarily at the same rate, but I'm relatively pleased. If it ain't broke, don't fix it, but you don't know if it's broke, and your advisor probably doesn't know when it will break, how it could break, because they're working with 1,000 people. So if your pain point gets hit, let's say it's minus 20 on your investments, that is minus 20%, you are going to find out, potentially, that the person sitting across the desk from you, even though you've known them 2, 3, 4, 6, 8, 10 years, that person is a stranger. One of the questions you can ask to help uncover how much influence they have on your financial future is, what role do you play in selecting my investments? You will be shocked to hear the answer. This brings up one of the things that we mentioned in earlier episodes we would touch on, and that would be the managed accounts. Yes, they are managed, but maybe not by the person sitting across the desk from you. That's okay. There's some big third-party firm, who knows, an investment company managing my money. Good. You, person, sitting across the desk from me, receives fees and commissions paid out of my pocket. What for? So the questions to ask: what role do you play in selecting my investments? And if the answer is, well, I manage the managers, don't worry, I'm watching out over these guys and I got control. No, that's garbage. They have no input into the day-to-day, month-to-month, quarter-to-quarter, or year-to-year management of your investments. Well, I manage your plan. I know those plans. They are easily manipulated by just changing some numbers behind the scenes to make them look good for you. Those plans really are excellent sales tools to uncover other assets that you have to invest, or possibly products to be sold to you to fill, quote, holes in your plan. So be careful out there. How many clients have the exact same investments as I do or as other clients? Because if you are in a relationship with an advisor who is using managed programs, they probably only have 6 or 8, at the very most, 6 or 8 unique portfolios that their clients are in. So, are you okay with that? I am not necessarily passing judgment on all of that. I am absolutely certain most of the people listening, or who will listen, or who have any relationship with an advisor, don't understand. You truly believe that the person across the desk from you can make investment decisions with you with a phone call. And I am here to tell you, your managed portfolio is managed by someone else. If you don't own investments in companies, like the companies that you know and love and use their products, if your statement doesn't have those names, if instead it is a bunch of investment companies, mutual funds, etc., exchange traded funds, most likely your advisor is not in charge of picking that. If you're okay with that, cool. But if you're sitting there thinking, man, they really kind of made it seem like yeah, they were in charge. Or my very, very favorite, well, I manage the managers. So you're in charge of the guy running a $30 billion mutual fund based on Wall Street, huh? You're going to call him up and say, hey, I really think we should maybe move a little money over to... No. Nope. No impact. No selection of the investments in your life. Doesn't mean it's not going to work out for you. It does mean you might want to examine your relationship. So we come back to, what exactly does that person across the desk from you do? Well, they probably send you a Thanksgiving ham. They probably don't take your phone call right away. It's kind of like the dating world. They have to wait 2 or 3 hours to make themselves appear less accessible. Your money, your advisor, but they're being trained to not take phone calls to appear less accessible and thus more important. What do you do for me? If you ask once or twice, you might kind of get an answer that makes sense. Peel the onion, keep going. And now start to identify for yourself, how important am I to this person who doesn't pick my investments, has no direct impact on my investments, and who has 600 people, at least, more or less, who knows. My experience, I had 550 households. I got it down to 400 at one point, but if somebody walked in, basically I had to take them. So this person with 600 households who isn't in charge of my investments and who has just a real stock, quote, financial planning tool that's really better viewed as a sales tool to find other opportunities where they might be able to roll over your old IRAs or sell you life insurance or sell you long-term care insurance. Not that any of those things are bad. You just need to understand your relationship. How do you get paid? Commissions and fees. Advisors are trained extensively to answer that question. And they're usually pretty good at it. Why do you get paid? That's tougher. And you should ask. How much do you personally receive of that will definitely set somebody back. And if you want somebody to be with you for the next handful of decades, you should be asking tough questions the same way they ask tough questions of you. When you walk into a financial advisor's office, they want to know every single thing about you. The good ones and the not so good ones. The good ones want to know everything, all your experiences, all your assets, so that they can truly put together a comprehensive plan and understand what is going to scare you. The not so good ones want to know everything so they know what they can sell you when and how to best address those sales opportunities. How much do you personally receive of the commissions and fees that I pay? Now you start to get a pretty good sense of somebody with 600 households who's not in charge of your investments, and they are not making nearly as much money, quote, on you or your fees or your commissions that you're paying as you thought. You start to understand. I hope you start to understand how very unimportant you might be to that person. What type of flexibility will we have to change the investments down the line? If somebody's running a model-based practice with managed accounts and third-party providers, you can expect to oscillate, move between maybe 6 or 8 different programs. I'm a little worried about the market. Oh, don't worry. We've got this. This one's a little more conservative. We'll move you over here. Now, you think, excellent. They already had a more conservative strategy that they have designed and that they manage and that they're going to watch over that and me and call me with changes and they're going to No. There's a third-party manager that has a menu and they just move down the line of more conservative or move up the line of more risk-taking. What plans do you have? Should we face my pain point, a market downturn, a crash, a pullback? Use whatever buzzword you want. What are we going to do? Ahead of time? During? After? Some advisors have crystal clear plans for all of those scenarios. Without predicting which way the market will go, We need to prepare for all relevant outcomes. Some are simply going to flow you through 6 or 8 different managed programs. I know that's hard to believe. If you get under the hood, I'm telling you, it's what you might see, because that type of investment philosophy on behalf of your financial advisor is spades better for the firm. Because if the firm can get the advisor away from investing and away from managing portfolios and can get them out there selling more, the firm makes more money. All this is meant to fill the gap of information that you may have about your relationship with your advisor. Good, bad, indifferent about the end result. The cake may still get baked. You should know what the ingredients are. Some things that you can ask, because we all make decisions emotionally, especially when it comes to this world of finance. Some things that you can ask to maybe help you identify whether the person across from you is truly trustworthy. And it is tough, because all advisors are trained salespeople first. Trust me. Unless you come from money and you're basically just managing your family's money, you had to start somewhere, like in a conference room with a flipped over milk crate and a phone book and somebody telling you to go sell your way to a chair. We are all trained salespeople to start. Some of us just keep doing that. Remembering from one of the previous episodes, direct advice I got from one of the very large firms. Learn 5 mutual funds, a couple annuities, and get out there and start selling. Yikes. So, questions you can ask to maybe uncover what type of person you are sitting across from. How long do you plan to stay at this firm? Expect them to answer. I don't know what they're going to say. Almost certainly they're not going to tell the truth. Maybe it's not a very fair question, but if they are at one of the very big firms, 9 times out of 10, those advisors have gone looking. Could be currently looking, and probably not going to shoot you straight. These next 2 are the most revealing question you can ask of an advisor, in my opinion, when it comes to their character. Are there any investment recommendations that you have regret about? If the answer is no, get up and leave quickly. And if you sign anything, tell them to put it in the shredder. You know, I do regret. I saw something in the market somewhere. I thought it would have been a good trade. I thought it would have been a good time to buy. I knew my client needed the money in 6 months, and I knew I should have sold out. These types of things are normal, relatively run-of-the-mill, and you should get a reasonable answer from them. Then follow it up with, are there any client investment recommendations that you feel guilty about? If the answer is no, take a long, hard look at the person you're sitting across the desk from. Because as a trained salesperson who has no lifeline when you get into this business, who has bills already, you are going to make, as a fledgling, struggling advisor, you have made recommendations in the past that you do feel guilty about. And if they say absolutely not, I am crystal clean from day one, and I will stand. Okay. Best of luck to you. Those will get at the heart of character. And if you'd like to know my specific stories, call or email. Would love to hear from you. bk@fmwmg.com or go to fmwmg.com or call 239-689-9364. Would love to have the discussion with you. I don't care if you have known your advisor for 20 years. You go golfing all the time. Things have been relatively good. They send you Christmas hams. They send you Thanksgiving turkeys. They remember your dog's anniversary. All of those things are firm-trained sales tactics. I know you don't want to hear that. I know it's sort of offensive for me to even say it. But the way that they retain clients is to structure touch points that make it seem very personal. It's okay in the end to get an extra Christmas ham, but you should know what's going on behind the scenes. You should understand your relationship with your advisor. Now, skill and care is what you're looking for in an advisor. Went skill, little care, back to skill. What kind of research do you read? I don't do a lot of research. The firm does that. Okay. That may still get your cake baked, but the person sitting across the desk from you does what? The person earning your fees and commissions does what? Forwards on a newsletter that they wrote? Maybe. If it's got some personal information, and if it seems to have the tone that they speak in, yep, it's possible. It's also possible that they went to the, stick with me, the ghost written section of their firm's internal marketing campaigns and put out a newsletter that was supposedly written by them. Well, that ghost written section has 30 or 40 or more. No, I'm not kidding. It's everywhere. You should know the expertise that you're reading in that newsletter. Take a second look at it. If it sounds like your advisor, if it includes personal information to identify, it's probably by your advisor. But it's possible your advisor could have sent out 500 newsletters that looks like they wrote it when all they did was click a button. Good, bad, indifferent? How do you feel? Do you feel slightly misled? How will you feel when the market starts to go down, or if you miss some of the potential upside, when your investment doesn't look as rosy, and you've been slightly misled on almost everything up to this point? Ask them, what kind of training do you pursue on your own? Because here's a secret. The continuing education that advisors have to go through on an annual or biannual basis for all of their licenses is point and click. You can take it as many times as you want, and there is no fail. So, the only way an advisor truly sharpens their axe is to do it on their own. What is your ongoing learning process? What worked? The markets, everything about the world of finance 10 years ago is almost completely obsolete. Exchange-traded funds went from several hundred billion to many, many trillions of dollars worth of the market. Algorithms, computers, robots make up most of the daily trading volume. We've had monetary easing, the likes of which have never been seen. Nothing is the same. If your advisor is pumping out 6 or 8 managed portfolios and a handful of annuities and a handful of mutual funds, and their job is to go sell as many of those things as possible to as many people as possible, they might not even know. So you can't necessarily blame them, but you don't have to work with them. What do you do to sharpen your axe? What do you love about your job? One of my favorite things to say is, I kind of like golf. I am horrible at it. I love to go fishing, but that takes a lot of time. Other than being with my family, my very favorite thing to do is be in the office, researching, reading, meeting with clients, discussing their investments. And frankly, the focus behind the scenes in this industry is to present you with planning and with ancillary strategies about insurance and estate documents and a lot of blah, blah, blah. But eventually, I think you'd like to make a little money on your money. That would be the end game of investing. And so if you are not achieving the types of portfolio returns that you think you should ask why. If there is a cohesive reason, not taking as much risk, thus underperforming the market overall as a whole, that's fine, but you should know why. These are the types of things you need to ask. If you start to ask these questions now, at the who knows where we are in the cycle of the longest bull market of all time, but usually things don't go up forever. Get these things out of the way now, and you'll be in a better position for whenever the next downturn comes. Are there any investments that you refuse to do for clients? I bring this up only because I have some personal experiences in my past where my jaw hit the floor when I heard the answer to that question. So you should ask. Are you paid different amounts for different products and strategies? Please, please, please ask this. And if they say no, get up and leave. If they say no because we only pursue one type of strategy, okay. But if they have a whole suite of products that they are providing and they say no, it's false. It's false. Leave. Get out. So we'll finish up a little today with some thought processes. Again, all of the end results of this are not my concern for you, the client. My concern for you, the client, is your understanding of the relationship you have with your advisor. If you are in a managed portfolio and someone else is managing it, you need to know that. You need to not be in some gray area where your advisor kind of made it seem like they have an input into the investments that are being made. If your advisor is paid different amounts on different products and those products are being proposed to be sold to you, you deserve to know that. You deserve to know how many households your advisor works with. There's only so many hours in a day. And I've known a lot of advisors over my life. And if any of them work 40 hours after their first year, it's because they did something wrong. So don't think your advisor who has 600 clients can do it because they work 12 hours a day. The simple fact is they can't manage it properly. You deserve to know. Where are you in line? How many clients would they like to work with? How many clients do they plan to work with? If somebody at a very big firm tells you that there's some specific number, I don't know. The next time somebody walks through that door, I know the shareholders of that public corporation are going to want that advisor to sell that person a product and to add them to their book of clients. What do they do to sharpen their axe? What do they love about this job, this person that might be in your life for the next 2 or 3 decades? Why are they here? Punching a clock, making a couple $100,000 a year, maybe a handful of $100,000 a year. Eventually, move to another firm that looks and smells exactly the same. That other firm will give them a big upfront check. They will rest for the next 8 or 9 years and then retire early. That's not casting judgment, just saying you should know. Why are you here? What do you do for me? How much does it cost? What are you doing to earn it? And then if you really want to get to the character, ask about previous regrets and then ask about guilt. If somebody tells you they have no regrets and no guilt in this business of their entire career, that would be an anomaly. So, close today. Heavy stuff, I know. Easy to discuss on a one-on-one basis with you. Would love to arm you with the knowledge, arm you with the questions to ask your advisor to determine exactly what your role as the client is and what their role as the advisor is. This is Brendan Kelly here on Compound Interesting with Fort Myers Wealth Management Group. The opinions voiced in this program are for general information only and not intended to provide specific advice or recommendations for any individual. To determine which investments may be appropriate for you, consult with your attorney, accountant, or financial advisor, or tax advisor prior to investing. Securities and advisory services offered through LPL Financial, a registered investment advisor, member FINRA, SIPC. These are hypothetical examples and are not representative of any specific situation. Your results will vary. The hypothetical rates of return used do not reflect the deduction of fees and charges inherent to investing. Stock investing involves risk, including loss of principal. The payment of dividends is not guaranteed. Companies may reduce or eliminate the payment of dividends at any given time. Bonds are subject to market and interest rate risk if sold prior to maturity. Bond values will decline as interest rates rise, and bonds are subject to availability and change in price. An investment in exchange-traded funds, structured as a mutual fund or unit investment trust, involves the risk of losing money and should be considered as part of an overall program, not a complete investment program. An investment in ETFs involves additional risks such as not diversified, price volatility, competitive industry pressure, international political and economic developments, possible trading halts, and index tracking errors. Investing in mutual funds involves risk, including possible loss of principal.